Hi, today I have with me Jay Hatfield, the CIO of AMZA, which is a publicly traded midstream MLP ETF. And we're just going to talk about sort of the oil and gas industry and see what's going on in his sector and other things that he analyzes. Thank you so much for being with me today, Jay. I appreciate
Thanks,
it.
Jennifer, for having me on again.
Sure, sure. Yeah. So I was talking about how this is in advance of Seeking Alpha's Investor Summit, and I'll probably be putting an article up and then speaking in mid-June, and so it's really good to get some sort of boots on the ground, ideas from you and see what you see in terms of where things are, what's happening in the market. So my first question is, we always seem to start with the fundamentals, but what is your outlook for oil prices and what fundamentals are driving it in your mind right now?
Well, of course, oil is very tricky commodity. Most people don't really try to trade it because it's somewhat irrational in the short run. So it ran up to 90. I'm talking WTI right now. Ran up to 90 as we sort of headed into driving season. And then it's kind of inexplicably collapsed down to 78. Now, that's not wholly irrational because our supply and demand model, this is global supply and demand for all oil, is that we're roughly in balance when the price is at 85.
Mm,
So I would expect, that's why we don't just say 85 is our target, we say 75 to 95. So we think it's making a bottom down here in the 75 range. So I guess actually if we followed our ranges and religiously, but it doesn't feel good while it's happening.
mm,
So like, I guess you would have sold it at 90 and bought it back at 78, but it's pretty dicey endeavor.
mm.
But so the most likely case is it probably bounce back during summer as we get into driving season. We're just about to get into driving season. But in the short run, it's actually bullish for inflation because oil does bleed through to core inflation. We saw a
Right.
cooler print today, but we think the next 2 months will be even better.
Mm-hmm.
And so it has implications for just short-term macro data as well.
Right. Um, obviously we have this election coming up, and do you see any of the, policy pronouncements and all that could potentially impact, what we're seeing in any fundamentals, or are we so intertwined in a global market that, we're not moving the needle as much anymore?
Well, really, notwithstanding the administration's hostility to hydrocarbons,
Yeah.
which is not rational because there's not enough wind and solar. And we're already seeing like most of the power producer stocks have run up tremendously because there's developing shortage of electricity.
Yeah.
So, but notwithstanding that policy really hasn't infected US production at all, partly because a lot of it's in Texas and Texas regulates itself.
Right.
Is only the federal government only can affect federal lands and interstate.
Mhm.
So since Texas can get down to the Gulf, so US production continues to increase of both oil and natural gas, and we continue to export it. So it's only morely in the long term that the hostility towards hydrocarbons would, potentially produce a problem or a shortage or affect global supply. And then, so if there was a Trump administration, actually could hurt the price because it might be easier to site pipelines, LNG exports. That would be positive for US natural gas prices. But I also don't think it would be dramatic. I mean, people in general tend to overstate the importance of who's president for the economy.
Right.
Economy is primarily driven by Fed policy, energy shocks, and then the president is just there and gets blamed for it or takes credit for it.
Yeah.
So that's my view at least. And so because of Manchin as well, there really hasn't been any big reduction or any significant constraint put on energy producers. And in effect, it's helped the pipeline companies because it's created a monopoly. There have not been any new pipelines launched. or are very few, interstate Texas for sure. But, so that really helps US pipeline companies, but it doesn't help the producers. Right now, the producers are kind of getting hammered
Right.
in the Permian because there is a new pipeline being developed, but Energy Transfer is printing money right now because they can buy gas for zero in Waha, which is near Permian, is the natural gas hub in the Permian,
Mhm.
and then transport it on a pipeline and sell it in the Gulf for $3 or $2.50. So
Right.
they're making, so the fact that those pipelines took a while to be developed is creating opportunities, but I don't envision it being just like some enormous change if we
Mhm.
had a different administration.
Yeah. Yeah, that's interesting because I believe I could characterize Energy Transfer as having, one of the most robust pipeline, assets in Texas,
Mhm.
and I wrote that story like, last fall or whatever about pipeliner's dream. That dream's coming true, it sounds like.
Well,
So
definitely. Yeah, and Kelsey, the founder of Energy Transfer, one of the founders, was early in that trade and bought a lot of the distribution pipelines like into Dallas and then reversed them because Dallas is now where there's production. So he really printed a lot of money being early to figure out that these basins were booming and
right.
needed takeaway capacity.
Yeah, no, and I'd spoken to him at first in 2014, and he was seeing the opportunity back then, and he'd sort of like secured a lot of the pipelines out of the Barnett initially, so he had that, and then that went sort of more bust, but then he did rework, like you said, a lot of pipelines and around the country, including the Bakken and all this stuff.
Yeah, so and that also led to like the Permian capacity is extremely valuable right now. Not so
Right.
much the Dallas basin isn't very profitable, but
No.
they have a whole system that goes around kind of circles Texas, so they can take advantage of basis differentials and deliver the gas to Texas to Dallas that's in the Permian.
Yeah.
So he did create a very robust system and it benefits from drilling activity, and right now that activity is in the Permian.
Right. Um, I mean, it almost seems like it's not. I don't even know if it's worth it to discuss Appalachia, but I had a question regarding gas because obviously that's a big gas play. Is there? I mean, is that just going to stay like it is in terms of what its capacity is because of the lack of takeaway capacity to like the Gulf? But I mean, obviously I think there's some action on a few of the midstream firms with, beefing up their East Coast export potential and processing. I mean, are you seeing any action in that area? Is it
Well, it's definitely, that's something where a new administration would potentially free up, they'd have to like fast track it so it could get done in 4 years. Because
yeah,
nobody wants to be like, oh, okay, it's 90% built, but you can't go across the Appalachian Trail.
right.
Again, that happened with Mountain Valley. But there are small ways to arbitrage it. You can reverse pipelines, you can build power plants, near the gas supply.
Right.
You can build chemical plants near the gas. So some of that's going on.
Yeah.
So the US economy is hard to hold back, even if you try, like the
Yeah.
Biden administration is.
Yeah.
So there will be ways to arbitrage it, but it would definitely be better for Appalachian gas development if there was a change, whether it's a change in administration or a change in the attitude about natural gas, because there's a huge mistake
Yeah.
ongoing to not supplement natural gas for coal,
Right.
partly because of carbon, but also you have to price all the other pollutants.
Mhm.
Like this, it's not trivial that we're, emitting millions of tons of mercury out of coal plants globally, SOx, NOx, ash into the air, ash into the water. And so that's a huge environmental opportunity that would improve carbon significantly, but even more improve the rest of the environment even more by
Mhm.
limiting mercury emissions. So that's kind of an ongoing tragedy that would be nice if, at least even if the existing administration sort of started to figure this out. I mean, they
Yeah.
should now because this whole vision of having pure renewables is blowing up in their face.
Right. No, funny enough, I was at this conference in Austin in March, and these videos just came out. And I just rewatched it, and there was a grid expert, and he was just discussing something about like the interconnection queues to get those renewables hooked up. There's almost like decades, to get all of it done. And I know
It's easier said than done. It's utilities do not move quickly.
Yeah. And also, I saw that there was this, news from the Biden administration, we're going to add more money for transmission and distribution and yada, yada, all that stuff. And that's good. And it sounds good on paper and it sounds good in a press release. But again, I don't know if the physical reality and all the things you have to do to make it happen can happen that fast, if at all. And if it's enough money.
You potentially may have big pushbacks because instead of pursuing the most economic solutions, they're pursuing the theoretical, non-fact-based solutions. So for instance, the most obvious example is banning the use of natural gas.
Right.
So instead of burning it in your home, you require de facto it to be burned in a plant a long ways away that then is converted to electricity and then reconverted to heat.
Yeah.
So you're increasing the demand for electricity. And the only place that it kind of will start blowing up in their face is that's going to cause electricity rates to skyrocket. It's already happening in California.
Mm-hmm.
So these uneconomic solutions that are just based on a utopian vision are there's going to get real pushback. It's already starting to occur in California because people just can't afford it anymore.
Right.
But it's great in theory. Oh, we're going to build all this distribution transmission. That costs money. That has to go into rates. I mean, the federal government can subsidize it some, but ultimately it's going to go into rates, and people don't want to pay infinity for electricity.
Right.
And it's going to make actually burning natural gas even more attractive. So it's even dumber to ban using it for home heating and for cooking.
Yeah.
It's going to be massively cheaper.
Yeah. So
and it doesn't even save anything. Like I said, you have to burn the natural gas anyway in a power plant.
Yeah. So you're saying, now I just want to clarify for anybody watching that you're talking about that natural gas ban on like gas stoves.
Heating and gas. Yeah. Heating and stoves. And I mean, those are where it's most efficient. You can also use it for other appliances, like if you're don't have electricity, but where you directly use the heat, it's way more efficient because power plants, first convert it to heat and then convert it to electricity. So you have two processes, and it's fundamentally less efficient than just burning it and using the heat directly.
Yeah, I guess what I was just saying is that, California implemented a ban, and it's come into effect is what you're saying.
Yeah, and they're doing it in New York State as well.
Oh, okay. Yeah, I knew it.
And it's just like, it's okay, but it's easy to say it. But then when you actually look at your electricity bill, you may not like it.
Yeah. Well, and I think that's what's happened in Europe with a lot of the net zero policies as well amongst different countries. Same story, that once it trickles down to reality, the consumers are like, no, and it is changing elections, absolutely.
Yeah, there's going to be regime change in Europe because of the environmental policies, no doubt.
Yeah. So, because I mean, people have to live, they have to afford to live and afford their home.
Yeah, I mean, it's global look, the environment's critical, I believe.
Sure.
But it's important to look at the whole environment. Carbon is important, but it is further away. But breathing in coal dust is like today.
Yeah.
So that should not be completely ignored just because there's a problem in the long run with carbon causing the earth to warm.
Yeah. Just to shift, because I want to make sure we talk about this a little bit too, is the LNG pause. There's a lot of still debate, discussion, and because it's there, right? And do you know of projects? I know there's a few, like 4 that are most affected by this pause. I mean, what would you say about its effect and those firms that are most affected by it?
Well, it is longer term.
Yeah.
And I think most people think that even if this administration continues next 4 years, that they will capitulate on this, because it just flat out makes no sense.
Right. Yeah.
Because all you're doing is putting Europe at risk,
Yeah.
reducing US growth, creating a massive surplus of natural gas in the US, and making the environment way worse.
Mhm.
So, maybe they have to hem and haw, but there's gonna be a lot of pressure from Congress on this too.
Yeah.
Because there's a lot of Democrats from energy producing states.
Right.
There's there's gonna be lobbying from Europe. And it just makes absolutely no sense whatsoever. So I think rationality will reign regardless of the political party,
Right.
but it's clearly a risk to the developers. The existing, most of the larger companies like Cheniere already have permits for their near-term projects, and they also benefit a little bit, like if there's less export capacity and
Yeah.
they're existing, just like the pipelines.
Yeah.
Sounds terrible, oh, we can't build any more capacity, but if you're the one who has the capacity, that's actually great.
Right.
So
Right.
I would just, I don't follow the private companies because we're public, focused, but
Sure.
for the more established players, it's ironically, could benefit them. And then I'm sure they'll be accused of price gouging or something because they have the limited capacity, but,
Right. Right.
but,
Yeah.
that's just the way the market works. If you ban new fast food restaurants, it's bad for growth, but it's good for the profitability of the existing fast food restaurants.
Right. Right. Yeah. So it almost sounds like what you're saying is it's almost not even worth your breath to discuss the pause just because of what it is and what will happen in turn.
I mean, I guess I'm just being optimistic that they'll realize that it was fundamentally not
Yeah.
intelligent.
Yeah.
And
That's
I think it's worth noting in Europe, at least the one advantage Europe has is they have a carbon price.
hmm
And that should produce, like, they also have a lot of prescribed outcomes that probably don't make sense, like shutting down all the nuclear
hmm
and some other, in gas, shutting down gas usage. But the carbon tax should result in the optimal solution for reducing carbon.
Right.
And it's also infinitely flexible right now. That, I mean, it trades, but if they can just raise that tax and
hmm
reduce carbon. So it creates a dial so that you don't have to be, doing strange policies about transmission and distribution and
Right.
subsidizing everything.
Right.
Because you can simply turn that dial and hope, if you do it with a tax, you can get in revenue and then offset the impacts on consumers.
hmm one thing I have a little bit of concern about it is this IRA legislation, because now not only do you have all the renewables firms and, and there's nuclear and there's everything in it, right? But now also you have some oil and gas firms even, wanting to take advantage of those credits. And what's difficult about this is it just, we're so indebted anyway that, adding another entitlement program, if you will, just seems perverse. Do you have any thoughts about the difficulties of this becoming entrenched in the long term?
Well, it's clearly a misallocation of capital, kind of by definition.
Yes.
So again, that's why it's better to say, instead of like, well, we're just going to pick these three solutions to the problem, let's tax carbon or have a cap and trade, and then let everyone else figure out, oh, is it geothermal? Is it conservation?
Yeah.
Is it renewables? Is it shutting down coal? So to pick one solution, subsidize it, the returns on those investments are likely to be worse than what the money otherwise would be invested in.
Right.
Almost nobody appreciates that savings equal investment, so that if the federal government borrows more money, there's less private investment.
Right.
If they pick, building chip plants and renewables, the returns on those projects, they could be competitive with what the private sector would do, but it's not very likely. They're
Mhm.
not brilliant allocators of capital, and they're
Mhm.
not constrained by market forces. So in theory, it's not great, but it is better than just spending it on general operations of the government. because it does
Yeah,
have some return.
true.
There's, maybe it's
Yeah,
5% and the private sector invested 15.
yeah,
That's better than just like running a deficit for no reason, for just
yeah,
general government spending.
right.
So it's more economic than that, but it's still suboptimal.
Yes, it's a deficit with purpose. It
Right.
serves an industrial
So it
purpose.
could be worse, but it's still suboptimal.
Yeah, right, right, exactly. Which, kind of seems to go around the world,
Yeah.
right? Maybe we're the least offenders, I don't know. So, obviously there's a lot of talk about, and with the demands of data centers and AI and all this stuff, and there's a lot of hype and a lot of interest and stories and all this stuff. And we know that natural gas wins in a lot of this, that sort of thing. And then what you pointed out is the fact that a lot of industry will have to move closer to energy sources, if we don't have the transmission capacity. So one of my thoughts is, beyond the data center, I wonder what the next story is, on this, because there's been all these stories about how much power we're going to need, 4% growth because of data centers, quantum computing, all of it, chat GPT, all of it. Do you have any thoughts about this story and the next story?
Well, it just makes the existing problem worse.
Yeah.
So that because we'd really actively discourage building natural gas plants, which is the lowest cost, notwithstanding disinformation to the contrary. Natural gas is the lowest cost fuel.
Yeah.
Sometimes solar and wind could be cheaper, but everybody always picks like the absolute most efficient place to, like if you're in the Mojave Desert, that might be competitive with natural gas. But if you're in the Northeast, it's like 3 times as expensive. If it's
Mhm.
offshore wind, it's 3 times as expensive. If it's in, the plains of Oklahoma where land's free, it might be, competitive. But
Right.
everybody forgets that it's site specific, where natural gas is more or less the same. Maybe you have to be thoughtful where you put it, but you just put it like we were discussing, you put it in, near a pipeline in Appalachia, and they actually have excess gas, so it's, really cheap. So you do it places where there's pipelines and excess gas.
Right.
Then you can transmit the electricity very far. Um, and it also, the other nuance that why we mistakenly not build natural gas is that it can be cycled, unlike all other production. And so it makes the grid more reliable. That's important, particularly in Texas, where they
Mhm.
have too much wind and not enough natural gas. So there's
Yeah.
been a policy error to overly favor renewables and discourage natural gas. So that's already was a problem. And then the data center issue is just making it worse.
Right. Well, and you've probably seen all the stories about nuclear too. Like, okay, now we've got to really up our nuclear game, which is true, but I just wonder how long that's going to take.
I
And
would put it in the same category as offshore wind. Sounds wonderful. Everybody gets all hyped up. And then you do the contracts and then you realize, oh, it's not economic. Or, so yeah, we're going to build us nuclear. And then you try to cite it and everybody freaks out. Like that is relevant, in my opinion, to freak out. I
true.
mean,
Yeah.
radiation damn, pollution lasts for like 100 million years. So
Mm.
it is not going to be, it's going to be way easier said than done, just like offshore wind and some of these other projects. It's just not, the utility industry does not move on a dime.
Yeah.
And maybe there'll be a little bit of incremental nuclear. Certainly we'll keep what we have. It's really
Yeah.
uneconomic to shut down nuclear, because
Right.
then you got to move the waste. Like
Right.
all the nuclear plants in the United States are the solution for nuclear waste, is to
Yeah.
leave them where they are.
Yeah.
So the worst thing to do
Yeah.
is shut them down and have to move it. Like,
Right.
you're just going to leave it in this horrible place where they have all this radiation.
Yeah.
So shutting them down, terrible. They're keeping Diablo Canyon open, but building new ones like Southern tried, it was disaster. There's smaller ones, but let's just see, cost overruns and the opposition. Like I wouldn't want it. I'm very concerned about radiation
Mhm.
exposure.
Yeah, so it sounds like, if environmentalists, are having to embrace something that has more density and baseload, i.e. nuclear, because it's clean, that's not the full consideration. And if you hate hydrocarbons, well, that's the better option still. It sounds like, it's still the better option.
I mean, the real solution, as I already said, is just have a very substantial carbon tax that you can dial up. If there really is a disaster, you can dial it up to
Yeah.
whatever you need to get the carbon down. And then figure out, instead of us debating whether
Yeah.
nuclear makes sense or
Yeah.
geothermal or heat pumps, is just let the market figure it out. Like I said, even with this trapped gas, there will be solutions to that trapped gas.
Yeah.
Because the private markets are very innovative. Capital will flow. You'll build whatever needs to be built. Could be carbon capture, but I don't know. All I know is that the solutions put forward, as far as I can tell, are extremely unlikely to lower carbon.
Mm-hmm.
So in other words, if you let the cards sound okay, but when you really analyze the value chain, it's about break even. But if you decide to uneconomically build $1 billion or more of charging stations that aren't really needed, then you're probably making carbon emissions way higher. Right. Because we didn't need those. All the materials that go in there create demand for carbon. So I would guess that most of the government mandates will make the carbon situation worse than it would have otherwise been.
Right. Just like China, manufacturing all these EVs that they don't have, they have to export them. It's the same. It's the same.
Well, and also they're de facto building coal to power them.
Right. So yeah, it's all waste. It's all
Right.
it's all excess is basically what we're talking about. We're creating excess in trying to reduce excess carbon emissions.
Right. But there is, I mean, Europe, like I said, you have to give them credit. They have a carbon tax. They should just, if they want to reduce, instead of all the mandates, just keep ratcheting that higher, and then have some of it be taxed so you can subsidize consumers so there's not a revolt. Because there is a revolt ongoing.
Right.
Even though natural gas has come off its highs, it's still way higher than it was before the green energy policies commenced.
Right. Just a question about, I know that obviously there's been a lot of consolidation in oil and gas. We saw the number that it's like something like 234 billion last year. Are you seeing some of that start happening in midstream, or is it just, is midstream kind of okay? I mean,
well, it's, I used to be an investment banker for utilities and MLPs. It happens in slow motion.
Yeah.
Because every deal is very complicated, has a lot of tax implications. So it does happen in slow motion, but the economics are that the pipelines were way too cheap, or MLPs were way too cheap. And so corporations were buying them out. And that is ongoing. Energy Transfer controls Sun. They just bought New Star. So we do think that MLP equities will continue to slowly benefit from consolidation as people recognize that people just got way too negative about energy infrastructure.
Yeah.
Partly because of the pandemic, partly because of oil coming off 5 years ago, partly because of environmental thoughts that weren't really true. But so that created an opportunity for smarter, particularly corporates, to come in and snatch up these companies. There's still likely to be some of that. The valuations are now somewhat more reasonable. They're still a little bit cheap, so probably it'll slow it down a little bit. But that has been clear dynamic, and the pool of MLP equity has shrunk pretty dramatically.
Mm-hmm. Well, and I've noticed too, in just looking at some of the stock performances, I was comparing, XLE, AMZA, ET, some of the green ETFs, and just looking at different aspects of energy, and yeah, the Midstream's done, the MLPs have done pretty well performance-wise in the last year,
They've really been pretty remarkable. And also, if you think about it more risk adjusted, I mean, they have a lot of, well, that's declined, but they had a lot of market risk, but they operated pretty well even through the pandemic.
Yeah.
So they're pretty
Yeah.
stable businesses, and they got way, way, way too cheap.
Yeah.
So there was a huge opportunity now. Like I said, it's probably a little bit undervalued, but the kind of like free money is probably out of that trade.
Yeah. Yeah. Let's see. Um, so, it seems like with LNG, there's a lot of, analysis about, growth of natural gas, global gas, going to grow. China's like the largest LNG consumer in the world, as is, much of rest of Asia. Um, I mean, do you see any risk about that, or does that just seem kind of reasonably locked in?
I think so. It's just the only variable is that China should not be building all that coal capacity. And so it's really a diplomatic issue of trying to get them on board for a more reasonable policy, because they're sort of easy to negotiate. I mean, the US and Europe are easy to negotiate with, because all they have to do is say, oh, well, look, we're building all these electric cars and we're building renewables, even though that's completely irrelevant to their total carbon emissions, because they're building all the coal too. So they've used renewables and electric cars to placate the rest of the world, but it's not working because they're building 40 gigawatts of coal every year.
Mm-hmm.
So more gas would be dependent a little bit on political resolution. Because also, if you think about like the average China province, it's really economic to build a coal plant because you use your local, there is coal in China.
Yeah.
So you use local resources to build the plant and operate the plant, and coal plants are the nightmare, so they take a lot of people. So there's a big political motivation to build coal.
Right.
Whereas like renewables don't require any operations. So that trend to really have it accelerate would need to be reversed.
Mm-hmm. But isn't it their policy though that they are going to be building more solar and wind as they can? I mean, at least they state that. But
Just if you look at the actual numbers, the coal overwhelms the renewables.
right, yeah, just as because of
They're
the
growing and they have tremendous
base.
demand for electricity. So to actually preclude the coal being built, you'd have to do a ridiculous amount of, like, an unsustained, not possible amount of wind and solar.
Yeah.
Because again, wind and solar can only be built in certain places, not everywhere. You can't build it in Midtown Manhattan.
Well, and I believe they do have a good bit of, shale gas resources if they would just access that as
Well,
well.
and the North Sea could be further exploited as well.
Mm-hmm.
But that has been curtailed because of, alleged environmental benefits.
Right. So what do you think about, what Chesapeake's been doing with, sort of cutting back on production, trying to shore up price and profitability and all that? I mean, how do you see any of that trickling through or shoring up prices, or, because I know there's been a lot of volatility in different areas and all that, as well.
Yeah, so that's what kind of keeps prices above $2, because you get shut-ins of wells,
Mhm.
because it gets uneconomic to drill. The offset to that is that the drilling where there's oil rich and liquids rich opportunities, particularly in the Permian, those will just continue because the oil is driving the economics, not natural gas.
Right.
So at the margin, it helps, but I would say that more puts a floor on the price versus a bull case for going to infinity.
Right.
I mean, the super hot summer would help, but even better, a cold winter. Like we had a very, very warm winter.
Mm-hmm.
And that was a disaster for natural gas. That's why I went to $1.50.
Yeah.
It's usually a buy around $1.50 or anything below 2. But I don't see the infinity case because it is hard, particularly now, to develop LNG export capacity. And we're just going to have a ton of production that comes from oil production.
Right. Right.
So natural gas is a waste product of drilling for oil.
Yep.
So that makes it just fundamentally cheap. It's great for the US economy, because the other way to export natural gas is to produce fertilizer, steel, chemicals. So it makes the US a bit of a juggernaut globally. It's one reason why we're outperforming Europe by like more than 3 percentage points in growth.
Yeah.
It is our cheap energy.
Yeah. No, exactly. I was talking about that as at a presentation in Montana last month, and just that, were it not for our shale gas production and everything, we would not be attracting all this industry that's coming, and so it's people forget that, right?
And it's also, it does not for retail, but for wholesale purchasers of natural gas, that if you're a big plant, you can take natural gas at wholesale and convert it yourself to electricity. So it drops the wholesale price of electricity as well. So that's just a tremendous, there's very little manufacturing that's not energy intensive. So it's one reason why Europe is just really suffering, is that their manufacturing is not competitive relative to the US.
Right, right. Yeah. Yeah, and people don't realize that. They underappreciate our energy infrastructure, our resources and all that.
Very few people know that natural gas prices electricity in most US markets.
Right, 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 exactly. Was there anything else that I missed or that comes to mind that you think is something sort of important in what's going on with fundamentals or outlook or?
Well, I think there's only one dynamic. So right now, actually, the euro is appreciating, which is good for, sorry. And so the dollar is depreciating, which is good for oil prices. But that is likely to reverse when Europe actually cuts rates, which is going to almost certainly occur on June 6th. So we think the dollar might be appreciating. That's going to be a little bit of a headwind for oil prices, although might be offset by the fact that it probably just came down too far too fast. And even today's trading kind of validated, because it was going to be rationally down a lot. And now it's up 1%. So I think we'll get a bounce, but that is a headwind, and that's bullish for inflation. If Europe's cutting, the dollar appreciates, and that's a negative for oil. So we think that once that actually occurs, not happening right now in the market, but when actually that cut occurs, that'll be a headwind for global commodities.
And you said June 6th. Is that because of the EU elections or?
ECB meeting, policy meeting.
Oh, okay. Because I know that there's a lot of elections. There's some EU Parliament elections that are supposedly quite important, as well, that are happening.
Well, that might sort of validate or not validate our view that you could get some regime change around uneconomic, green policies. But we're focused on the ECB. It's June 6th, is before our Fed acts. So you're going to get this 1-2 punch. Like we probably don't act; they do act.
Right.
You never know with markets. If it was totally obvious, then you could always make money. But it seems like now we're setting up for a rally in, in the dollar, because the dollar's come down, so it's going to be a pretty high level, like we're almost 109. So I just don't know how the dollar doesn't appreciate when ECB's cutting and we're not.
Right. Yeah, that'll get interesting for sure. Well, thanks for flagging that. So anything else to add? Well, thank you for your time. I appreciate it, and looking forward to New York City soon.
Thanks, Jennifer. It's my pleasure. Thanks for having me on.